Hello and welcome to another update video about HBAR. So in previous videos we talked about this Elliott Wave triangle that we are currently primarily tracking, and so far the price adhered to it very well, very nicely over recent weeks. The question is now, okay, has this D wave of the triangle bottomed at 4.6 cents? It certainly moved into our target area for the D wave of the triangle, and if it can now rally and make a lower high, then we have potentially 5 waves complete in the triangle in an E wave of the triangle. Yeah. So an E wave is a complex, or well, it's not a complex, it's just a correction. It's a corrective wave, basically the last wave of the triangle before we should see another bear market low. That's currently the projection. There's obviously a key level that basically shouldn't be broken to the upside to make that scenario still, or to keep that scenario valid. And that key level is here at 7.6 cents. So as long as the price stays below 7.6 cents, we should see one more bear market low below the January lows, yeah, on this chart. Now in this section, the price reacted where it needed to react, to our support area. And the E wave would be an ABC structure. For me, the A wave here in the E wave, so an ABC structure is a corrective structure that typically you will find that in an E wave of the triangle. The E wave is the last wave, it's a corrective wave, so we're looking primarily for an ABC structure. It's typically the standard structure you're tracking in a corrective wave. Now, the A wave was a little bit too short to be reliable. Nevertheless, I'm watching currently if the B wave is unfolding. Bear in mind, this is only a corrective move up. It's not like any good, decent trade setup in my opinion, because you don't have the high level trend going up. Okay, so this would likely just be a correction, and you know, this just confirmed by this latest move up, which just looks corrective. It's not impulsive. Yeah, so it's a perfect A wave. It's just a little bit too short. But what would be an ideal target for the E wave anyway? So let's see if we can actually get there. So if we take the length of the C wave, go to the low of the D wave, and then the ideal target would be the 61.8 extension at around about 6.75 cents. Yeah, I mean, you can see the A wave was maybe a little too short for that. We'll see how this all develops, but to maintain the view that an E wave is now unfolding, the price must not break below the Monday low again, so not below 4.6 cents. If it's doing that, it might go down more directly, and actually, as you know, our base case is currently another bear market low. It would just be, yeah, perfect from a triangle point of view to make one more lower high, basically complete this decent 3-wave structure there in an E wave. I continue to track that. I will track it as long as we're holding 4.6 cents. If that's broken, yeah, on a sustained basis, then we might look for a wave count that moves down more directly. I mean, that's possible in an ending diagonal. In the end, both scenarios point still towards a new bear market low on this chart, and it takes a break above the C wave high here, above 7.6 cents, to suggest something different, because then the triangle would need to be reevaluated. Until then, the triangle is valid, and ideally we're doing this last wave up currently. So yeah, it's been moving in corrective structures here basically since the beginning of the year. So it's basically trendless at the moment with reduction in volatility. And yeah, I mean, it seems likely from here to start a short uptrend on a smaller time frame to complete this E wave. So not much more to add. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.